we can use your charts as an example. Okay, hold on. All right. Okay, great. Welcome, welcome. Thank you for spending time here today. You're here at the Naked Trading webinar. My name is Walter Peters. I'm a full-time Forex, wrote the book Naked Forex, and I love talking about it. I also love learning from my students. You know, sometimes people ask you, why do you do this? Why don't you just stay in your dungeon and trade by yourself and, you know, get the greedy little grin like Mr. Burns and rub your hands together because you've got the secrets to making money. Well, as it turns out, it's not really about the secrets, it's about you. And that's one of the things I like about trading is how I'm going to share with you a system. And some of you are going to look at that and go, that's crap, and walk away. Others of you are going to look at it and go, well, that's interesting. What if I did this? And you're going to tweak it a bit. And those that I think are going to do quite well. And then others will just take exactly what I say and try to implement it exactly precisely as I say. And unfortunately, they're probably not going to do as well. It's interesting to me that the best students, the people that just do exactly what you say, don't do as well in trading. And the reason why is because eventually your beliefs come up and bubble up to the surface and take over your trading system. That's what I've seen over and over again. I could be the kind of pattern that we see over and over again. Today, we're going to talk about the Acapulco trade, which is a breakout trade. It's an interesting setup because it kind of shows you in using a simple strategy that are going to disregard and say, or that doesn't make sense, or there's no way something like that would work. And that's fine. I know traders who do things like buy at 3 p.m. on Friday. That's their system. That's it. Put a trailing stop on the entry, on the order, and walk away. Like, these are the simple sorts of strategies that actually make. I find that when we use really complicated things like wait for this filter to go red and then get in with this indicator, but if this one is going this way, then it negates that and it cancels it out. Once you start adding too many rules, it gets too complex and they tend to break apart because they have curve fitting is a way of looking at it, or too many degrees of freedom. What ends up happening is you get really, really good at explaining a really small subset of the market, but when you have really broad rules, it does better in large chunks of the market's experience or what the market throws up on the chart. So that's the way I like to trade, is this simple rule. So let's talk about the Acapulco. Let's see if we can find an example for you. All I'm doing right now is I'm just, we could have a shoulder, head and shoulder here, right? If this keeps going, you can have a little shoulder. If that shoulder completes and then the market breaks through here and then comes back up and hits the neckline and then comes back down, that could be a trade right there on the 1 hour Kiwi. Well, I don't know that that's going to be the case, but that's a definite possibility. So that's one to watch, isn't it? But let's scroll back and see if we can find an example of an Acapulco trade. All right, let's see here. Okay. Actually, let me show you one that that didn't actually. This is probably I was going to say I could show you one that didn't trigger. Let's do that. Let's show, because this one's really good. It looks perfect, but it actually didn't trigger, and then I'll show you one that did trigger. All right. So here's the deal. The Acapulco trade is a simple breakout strategy. It's a 2-candle breakout strategy, and I'm just going to talk about the entry. I like to take support and resistance targets. I also like to use trailing exits. These are the ways that I approach profit taking. but it's a personal thing, and it can drastically affect the profitability of your system. So you don't have to do it the way I do it. You can decide to do it some other way. But what I want to show you here is this 2-candle pattern, which is a simple breakout and retouch. Now, we're looking at the New Zealand dollar 1-hour chart, but if we were looking at the New Zealand dollar 15-minute chart, what we would see here is something completely different, because I'm going to go ahead and do that actually. I'm going to back this sucker up, and we're going to see the 15-minute. Okay, so this is the 15-minute chart, and see how the market broke through this level. So this is a support level, because why? Because there was support back here, right? The market found support on this level. And then I think it did back here too as well. Right here as well, see? So that's why we know that there's a potential trade there. So almost all of my trades, not all of them, almost all my trades, my systems rely on market reaches support and resistance level. That's number one for the Acapulco trade. It reaches the support and resistance level. Number two, huge candle breaks. Now, it not only has to break the support and resistance level, but it's got to make it an obvious break. What I mean by that is there should be really no question, besides some lunatics who are looking at the chart. Like the average person, when they look at that chart, should decide, yep, it broke support, or yep, it blew through resistance. And I'll show you in the 1-hour chart what I'm talking about. So here's that 1 hour. So here's the support back here. There's a support right there. And then bam, it finally breaks through right there. Okay. So everybody would, no one's, when I say no one, I mean, some people are going to argue this, but no one is going to argue. Very few people are going to look at this big bearish red candle here and say that it's on support. Most people are going to look at it and go, well, it bounced over here, it bounced over here, and now we've closed below it. It's a pretty good sign that it's broken support. Okay. Now, so that's the first candle, the huge candle that we call the cliff candle. So if you're familiar with the divers in Acapulco, Mexico, what they're known for is jumping off these giant cliffs, right? So that's why with the Acapulco we have a support and resistance level, and then we have a cliff candle. So this huge candle that breaks through support and resistance and closes on the other side of support and resistance, this is what is known as our cliff candle. That's our cliff candle, okay? Now, the next thing that happens is we have a diver, and that's the little white candle here, okay? That's the second candle after the cliff. It's always the case that you will have a cliff candle first and a diver second. Another way to say that is, if you don't have a diver candle immediately after a cliff candle, you do not have an Acapulco trade. Now, what is the diver candle? Because it's kind of this weird concept of a much smaller inside of the cliff candle. And that's exactly what we have here. We have a much smaller candle, and it really should be smaller. It's far from ideal if your cliff candle and your diver candle are about the same size. It should be the case that your cliff candle is much, much, much bigger than your diver. Your diver should be super tiny compared to the cliff. And ideally, the cliff also closes on the extreme low or the extreme high. We didn't actually get that here. We got it closing near the low, but not as low as I would have liked. I would have liked to have seen it close maybe a little bit further down the line, closer. It was a little bit high, but still passable. It's still a valid setup. Diver is smaller, and it retouches zone. So there's a couple of important things here about the diver. It's smaller than the cliff, and the diver should make an effort to come back up and retouch the zone. In other words, it's a breakthrough support here, and then a retouch of support, which shows that yes, it is indeed resistance, because the market cannot close above it. If at any time during the trade or before the trade's taken or after the trade's taken, if the market has closed above this zone, clearly closed above this zone, the trade is over. It's done. Finito. No mas. El fin. It's over. That's it. Because what really should happen here is we break support in this with the bearish setup. Obviously, with a bullish setup, it's the opposite, where you break resistance and then retouch it. But you break support with one candle, that's the cliff. Then you retouch it with the second candle, that's the diver. And then you fall away again, and that's your entry. So what I like to do, and there are many different ways, I have a whole course on this, but there are many different ways to trade this. But what I like to do is put my stop loss above the cliff. So the stop loss goes right here. And we'll just paint that, we'll color that orange, so we know that's stop loss. And then I like to put my sell order a few pips, 6 pips usually below the low of the daily, the cliff candle or the diver, whichever one's lower. Now, a lot of times the diver will be an inside candle, but that's not necessary. Sometimes it has a slightly lower low in the case of a bearish Acapulco, and that's okay. Then I would place my order below the diver's low. But in this case, I'm going to put it 6 pips below the cliff low because that is the lower low. Everyone clear on that? If anything that I'm saying here doesn't make sense, you think this is really weird or whatever, go ahead and post a question, okay? More than happy to take your questions. Okay, so there's my entry price. So you can see here on the New Zealand dollar that the risk is going to be roughly 22 pips, okay? Roughly 22, 23 pips. You need to add the spread onto your stop, but most traders know that. Obviously, if you have a buy trade, you add your spread to your buy price, and if you have a stop loss on a sell trade, you add the spread there. So looking at about 23 pips risk. All right. So now what do I do? Well, I'm glad you asked, because now what I'm going to do is wait 2 candles. I should put the next rule in here, which is obviously the entry goes below the low or above the high. Entry below lowest low of 2 candles. It's a 2 candle formation, the cliff and the diver. Whichever one's lower is where the entry goes. Stop loss goes above the high, and I wait 2 candles. Stop is above the high of the cliff, and I wait 2 candles. Cool. And so candle 1 right here, has it traded lower? No. Candle 2 still hasn't traded lower, but it hasn't busted through my support level either, my support and resistance level, which is at 69.95. And then finally, it's a third candle. So at this stage, not only has the market closed above my support resistance level, which is not a good look, which means the trade is invalidated, but also I've given it 2 candles and it still hasn't traded lower than the low here. So it's a no trade at this stage. So this would be a no trade. And besides that, it went up here and would have stopped me out had I got in early or whatever. So that's an example of an Acapulco trade setup that didn't trigger the criteria. Are there any questions about what this setup looks like? Does this make sense to everyone? Market reaches a support and resistance level. There's a huge candle that breaks the support and resistance level, whether it breaks above resistance or below support. The diver prints, so that huge candle is the cliff candle. The diver prints, which is a smaller candle, retouches the zone from the other side. Whether it's a bearish setup, it'll touch it from below. If it's a bullish setup, it'll touch that zone from above and find support. But in this instance, it should find resistance here. And then I put my stop loss above the high of the cliff candle in the case of a bearish setup. Obviously, it would be below the cliff candle if it were a bullish setup. And then I wait 2 candles for the market to trigger my trade, and that does not happen here. So this is a no trade. Now, let's find a bullish example because I just feel like it's important to give you both perspectives. Let's move into a 4-hour and see if we can. Oh, and the other thing I should mention, because sometimes people will use these as reversal signals, I don't trade them as reversals. I trade them as breakouts, trend continuation. They are not reversals. I like to see the market going in one direction before one of these prints. I also like to see the market make a new high or new low that it hasn't made in a long, long time. In other words, the cliff candle should really be at the highest high or the lowest low we've seen in a long, 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 long time. That's really important to me. All right, let's see if we can, well, see if we can find another one here. All righty, so this is kind of an example right here. All right, let's see in this one. Okay, so there's support, support, support. It breaks through support, bottoms out in here, and then starts going up, right? Now, what's interesting about this is there's a bullish Acapulco here. Does everyone see where it is? It's right here. See, it's right here. The one thing I would say, though, about this setup is I don't like the fact that the cliff candle is so tiny. This is good. I mean, it's got support, support. It broke through, came back up, touched it, couldn't get through, came back up, broke through clearly, came back down and wicked into it. And that's great. But really, ideally, this cliff candle would be much bigger. It's only, and I know this is the 1-hour chart, but it's only, well, it's 22. I mean, that's not bad. But ideally, it would be much, much bigger than the diver. The diver's 18 pips and the cliff is 22 pips. So the diver is smaller in terms of the range, but really I would have preferred to have seen like if I'm gonna have a 22 pip cliff candle, I'd like to see like a 12 pip diver, you know, or a 15 or 14 pip diver, not an 18 pip diver. It's a little bit too big, the diver candle here, but it fits all the criteria. The stop loss would be down here below the low of the cliff candle. The buy order is above the high of the diver, which is triggered on candle 2. Candle 1 doesn't do anything, but doesn't break through support, which is great. And then candle 2, bam, it takes off. Is this making sense to everyone? Are you kind of following this? Some optimizers. You want your cliff candle. So let's give you some optimizers. You want your cliff candle to close at the extremes. So optimizers. Cliff candle closes at extreme. So if it's a bullish cliff candle, it should close at the extreme high. If it's a bearish candle, it should close at the extreme low. That's really critical. The other thing that you want to see here is Acapulco taken Acapulco's during mid-trend. What do I mean by that? I mean that the chart should be going up, 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 or down, down, down. It should clearly be during a trend that you take these. It's not a reversal setup. It's a continuation setup. It's a sign. If you're in a trend and you're in the trade and you see an Acapulco print, that gets me excited because I think, okay, the trend's going to continue now. So I don't need to necessarily worry about the support and resistance level because I think the market's probably going to break through this support and resistance level and keep going. And so if you're already in the trend because of another trade or for another system or whatever, an Acapulco is a trend continuation setup. I know a lot of traders who will ask me, they'll say, well, what about this? Look at this one. And they print a chart, or they send me a chart on my private form or whatever. And it's like, well, that's not a real Acapulco to me, because you're talking about a reversal. Reversal Acapulcos aren't Acapulcos. What I'm looking for are continuation Acapulcos. Trend continuation is what I'm all about, So that's very important to me. That it's a continuation, not that it's a reversal. Now, big shadows, mullahs, whammies, all of those things are great as reversals, but Acapulcos are trend continuation. Very important to me. Okay. And the other thing is, you really kind of want them to trigger at once. You want them to trigger with momentum. So your order should be triggered quickly. After all, we're in a trend. We're saying that it's broken through a level and it's just gathering up steam to keep going. So that's why I have my 2-candle rule. And I like to use that 2-candle rule in just about all the trades that I take. If the market doesn't trigger my order after 2 candles, then maybe the market's not going to reverse, or the market's not going to continue. When I put resistance, my system is either telling me that the market's going to reverse there and turn around, in which case it should do that and should do it soon, or it's telling me that it's going to break through and keep going, in which case it should still keep doing that. I don't have any systems that tell me the market's going to sit there. So if the market just sits there and never triggers my trade, or worse, if it goes to my stop loss price before it goes to my entry price, then I know it's not a good trade. That momentum is not on my side. There's a little bit more pushback than I was anticipating, and it's not a trade that I want to be in. So hopefully that makes sense. Cool. Are there any questions about the Acapulco trade, or is this all good? You guys all good with this? It's basically a trend continuation. So it's all about finding a way to get in on the trend. So let's see if we can find any setups right now. All right, so I'm watching the CAD yen because I think it's a good pair to possibly go long if it breaks above this line. What if it would make a bullish candle here that clearly closes above this blue line? What would that mean? Let me ask you, would that be a potential cliff candle? Let's say the market breaks clearly above this line, closes above the blue line all the way up here at 82.46. And then the next day we get another candle. It's a nice little diver candle, a little wiki candle that comes back and touches the blue line. Would this be an Acapulco trade? How many people say yes? Yes, this would be an Acapulco trade. Or how many people say no, that would not be an Acapulco trade? Again, I'm going to put it on here so you can see what I'm talking about. What if this candle closes like that above that line, and then the next candle is just a little tiny candle, just a little tiny wiki candle that kind of does that and just kind of wicks into it. So we have this big, massive bullish candle here, does that, and we get a little tiny wiki candle like that. Would that? So this is the big candle right here, this big blue box, and then the little tiny diver candle is that little line. It's like a little doji candle, right? No, that wouldn't be an Acapulco. And the reason why exactly is because we have this issue. And the issue is that the market is not in a trend. It's been trending down, and it looks like it's probably directionless now. It could trend up, but we don't know that. So if I were to get an Acapulco with a big, huge cliff candle today and tomorrow a nice little diver, I wouldn't take it because it's not in the midst of an uptrend. It could be the early phase of an uptrend, but it certainly doesn't tell me right now that this is an uptrend. In fact, it could just bounce around here and be really kind of consolidate around. So that's not the kind of trade that I'd be looking for. Okay. Now, let's see here. What I want to do is draw my zones in here. I'm just curious to see what is going on here. Oh, wow, look at that zone. Boom, 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 and bam. All right. So here is our, and there's going to be one right here too, isn't there? Yep, there is. So here is our chart and one's here. But had we a zone right here, we don't have one, but this could have been a cliff candle with a little diver, and then it could have won, but it didn't. It never went above the cliff candle here, so it never triggered in one, two, three, four, five candles. The sixth candle would have triggered the trade, and you'd be in now at about roughly where you got it. It'd be about break even, but it didn't do that. So this is why I would not, I would not call this an Acapulco. But that's the kind of setup that I'd look for in an uptrend like that. That would be the kind of setup that would be, ideal, really. I'm going to get rid of all of these crazy lines. And we don't really have any here. No, we already watched the euro yen. If the euro yen gets this zone, that would be fascinating to see what it does there. Absolutely fascinating. I want to bring up another point because this is another optimizer. If, let's say that the market printed a brilliant looking Acapulco right around here, okay? We have this zone here, this gray line that I've drawn in, and the market clearly breaks it with a nice big bearish candle and then comes back up and touches it with this little diver, on the other side of this. So like, in other words, it looked something like this. Now it didn't do this. Obviously it didn't do this, but I'm just saying, what if it did? What if it did something like that? That would not be a trade for me. Excuse me. And there's a really good reason for that. The reason why that would not have been a trade for me is because we had a lower low over here and a lower low over here. I like my Acapulcos to be the lowest low we've seen in a long time and the highest high we've seen in a long time. In other words, we're making a new high during a trend or a new low during a trend. And I don't like it when the market is in an area where it can get hung up on support and resistance. I really stay away from trades like this. Now I know this one isn't one, but I'm just saying, if it was just a little bit different, it could have been, and it would have been a no trade for me. Okay, I think that's really important to note that, because it's a subtle thing that people miss sometimes. The more you simplify your trade, the better off you be. Thanks, buddy. No problem, Ron. Aldo, can you please repeat where you are placing entries? Yes, no problem. You know what might be good, actually? How about we do some on the, you know what I really love to do? I don't know if you guys have ever used this, but I'm going to pull up my, in fact, I will say this, and you can get a discount copy here, and I do get a small commission for this, but you can go and get Forex Tester, fxjake.com/tester if you want to get it, if you don't have it. If you have it, you're awesome. The best traders I know, they all use it. Okay. So, okay. So what I want to do here is just move. This is a different system I was testing here. But what I want to do here is go, let's save project as Acapulco. Okay. Okay. All right. So this is the 1 hour. Okay. So let's go ahead and go daily. Okay. All right, cool. Now this is the pound yen daily, and let's just trade it. Okay. I'll show you exactly how it works. How's that sound? Aldo, you cool with that? Let's do it. Let's do some. So again, if you don't have Forex Tester, the best traders I know spend time building up their stats and their confidence in Forex Tester. There's no way around it. And you can say, well, it's not like real life trading. Well, yeah, that's true, but there's it's an expensive way to learn. Like me, you can blow accounts for 4 years or not really go anywhere for 4 years, or you could get a couple thousand trades under your belt in Forex Tester and then go into live trading with a little bit more confidence. I don't even think it exists when I was trading, but I didn't even I was trading for 6 years before I even found it. But here's the thing. It really is the best thing for your trading. So let's do this. Let's find a trend. When we see a trend, we'll keep an eye out for an Acapulco trade. What I'm doing here is I'm just pressing the space bar and advancing these candles one candle at a time on the daily chart. Okay? That's all I'm doing here. I'm waiting for a trend. This seems to be a downtrend here. It may be a downtrend here. Let's see. Okay. All right. Now that's interesting because we've actually clearly broken through this level. One thing that I will say, though, is that the current candle, if this is a diver, a cliff candle, sorry. If that's a cliff candle, the unfortunate thing is I don't like it because I like my diver to actually straddle the zones. So it opens on the above a support and resistance level and closes below it. And this one pretty much opened right on the zone. So that's not really an ideal Acapulco. It doesn't matter because there's no diver anyway. And the reason why we wait for the diver is for exactly this reason right here, because you'll get false breakouts a lot of the time. And the false breakout will almost always be known within 2 candles. So we know this was a false breakout, right? So let's keep going here and let's find a trend. Okay, it's an uptrend. Here we go. Now it's going sideways, hopping around, hopping around. Okay, here we go. Now we're going lower. This is good. This is good. This is good. We're going higher and higher. Excellent. Okay, so now I don't know if there's a zone here, but it looks like there is. So let's say that we had a zone already drawn here, and you're not allowed to draw the zone in after the setup. You know what I mean? But there's a bounce there. It held there. It retouched it there, which is great. So we're gonna call this a zone, okay? And we're gonna call this an Acapulco. And does everyone see why this is the case here? Here's your diver candle, the big bullish candle. Here's your cliff. All right. It's a 2 candle pattern, a break through a zone and a retouch on the zone. So now where's my order going to be? Is it above the diver here or the cliff here? Where do I put my buy stop? You guys know the rules now, so you tell me. Does the buy stop go above this red candle or above this white candle? This white candle is the one we're calling the cliff candle. It's the massive bigger candle, and the diver is the one that this red candle is the one we're calling the diver that retests the zone from the other side. See how this candle nicely straddles it? It opens below the zone but closes clearly above the zone. That's what makes this such a nice cliff. So the buy stop goes above the high of the diver because that has a higher high. And we're going to put it a few pips higher. And then the stop loss goes down here below the low of the cliff candle. Okay. So now let's see what happens. Is it going to trigger in 2 candles? Yes. It triggers on the first candle. This is really, I love this because why? Because it tells me maybe I have some momentum. It's going to head in my favor. I love it when the market does this, where it triggers a trade so quickly like that. That's a really, really good sign for me. Excited. So I'm going to zoom back in to where we were. Where are we? All right. So we're in the trade. All right. Now, what is this trade? This trade is up. It is up. I don't know. I totally messed up my Forex Tester. And I don't know how to get the template back to where it was. Okay. I don't know why it used to be that you had tabs and everything. Oh, it's only 83 points on the daily chart. So, okay, now we're talking. So it's at 116. I'm going to move to break even here. All right. And now what I'm going to do is see. I'm at break even. Let's see what happens next. Oh, stopped out at break even. Okay. Well, that was a. Now it's just going to chop around. So now it's going choppy. So that uptrend is over. Okay, well, let's keep going. Let's see if we can find another one. Is it going down now? Is this a downtrend? Perhaps. Perhaps. Yep. Okay, cool. Now we're chopping around again. Chopping around. Now we might be going up. There we go. Not chopping around again. Come on. There we go. Now this one, here, let me show you something. This could have been interesting if the zone was different. Like this could have actually been in Acapulco. See how right here, the zone was all the way down here. If that zone was up there, that would have been more interesting, but it wasn't in the right spot. So that wouldn't, and it didn't qualify anyway, because look, 2 candles couldn't break the high. So it doesn't really matter. But that's an okay, there's one. There's one right there. Does everyone see why this one is one? This is one for sure. It's going up. It flatlined here, went up again. So this would be a bullish Acapulco. I'll put my buy stop above the high of the cliff of the diver candle. Stop loss goes down here below the cliff. And let's see if we get triggered. Yeah, we're in. We're in and we're up 9 pips only. Okay. We're up 220. Now we're talking. Okay, so now what I'm going to do is move to break even. And now what I'm going to do is I am going to use a trailing exit, basically. So the stop loss is below the lowest low of the last 3 candles. Okay, so I got to move it up because now the lowest low is actually this this big bullish candle here. So I'm going to modify my stop loss. Put it right there. Okay, now the stop loss is below the current candle, which is the lowest one. And now it's below the second candle, which is the lowest one. Now it's the third candle, which is the lowest one. So I didn't have to move it. And now I do have to move it to below this little white candle right here. So we were able to withstand that pullback. It wasn't looking good, but in the end, Okay, now I get to put it underneath this candle right here. Now I get to put it beneath this candle right here. So it's up 322 pips. I don't know what the risk was. It was significant though, because it was a big wide candle. All right, so now the new candle with the lowest low of the last 1, 2, 3 is this one. So we move it up. Now we move it under this one. So we're still, see how the power of the trend, this is awesome. Turns out that the trailing exit is going to work quite well in this trade, but sometimes having a target will work well. So it might make sense to have a target and a trailing exit. So if it really runs, your trailing exit might take advantage of it. Whereas if it just kind of goes a little ways and then peters out, your target might be achieved. Can't see your mouse click. Oh. So see this? Okay. So I'm going to delete all the zones. So they're not in the way. But essentially, you can see where the buy was here at the green line off this bullish candle, and then this is the bullish cliff, and then this is the diver. Okay, I'm gonna move the stop loss now again after this. So now stop loss is below the third candle. Now the stop loss is below. I'm going to move it up again right here, and I'm probably going to get stopped out here. Nope, still in. I get to move it below this red candle is now the lowest low, right? So I move it up further. I will give you guys a hint here. One thing that's interesting about traders is most traders give their trailing exits too much room. They would actually make more money. I've done some studies on this. They would actually make more money if they now the lowest low is I believe the current candle. So I'm going to move it up just a bit, and now I'll probably get stopped out, which is fine. And that's it. Trade over. So I don't know what that made, but I think it was like just under 500 pips, 490 or 480 pips most likely. So does that make sense, guys? Do you see how the Acapulco works? Again, the power here is it's harnessing the trend. The trend has broken through a significant resistance or support zone, and you're just capitalizing on that. It's a breakout trade. It's a breakout trade. It's broken through a significant level during a trend. Okay, so that's the Acapulco. Do you have any charts that you guys want to see right now? We have a few minutes. If there's any charts you want to see, I can talk about them from a naked point of view, if you'd like. It's up to you. I like the Aussie Swiss here. We were looking for a possible sell here at this level, but if it gives a bullish bounce here off this level, then this would be a breakout with a retouch on the 4 hour, which could could look like an Acapulco on the daily. The problem is it's not been in an uptrend; it's been in a downtrend. So it wouldn't be a daily Acapulco. It'd be more of a bounce on the 4 hour, really. I think some of these yen pairs, like the euro yen, they're getting to really significant areas. So, like this spot right here is very interesting to me, and that's the 123.40 area, 123.50. That is a very interesting area. It'd be interesting to see if the market throws a reversal signal there, or if it throws an Acapulco. It could break through and keep going. Either way, that's a really interesting area there. I'm also watching the New Zealand yen. I took a trade on that one, and it's not looking so sweet at the moment. We'll have to see how that goes. Pound yen is on a tear. Yeah. So the ones I like really, the ones I'm watching closely are the CAD yen for a potential break and bounce off this level right here, which is again that 82.20 level. And then there's a similar setup on the Swissy where if it breaks this level, which again is, I'm going to call it the 99.60 level. If it breaks above that and then bounces, I could trade it up to this trend line as a target. That would be a target. And same thing on the CAD yen. It's a very similar setup on the CAD yen where it breaks above here, bounces off that, and then I would target this level up here. Yeah. Those are probably the most interesting ones. The New Zealand yen, not so interesting because it's going against me. It was a belt here and it went south. It went well, but now it's reversing. I'm not sure that it's going to keep going up because Monday was an up day, and typically Monday doesn't lead the week. So we'll see how we close today. And if it closes bearish today on the New Zealand yen, then that's cool. I'm happy to take that trade or to stay in that trade. But we'll see what happens tomorrow. If it closes bullish today, then maybe tomorrow I'll dump that one. The yen is also another interesting one. You could see, it's similar to what we saw on the Aussie Swiss. It's trading above this level. Maybe it'll come back down and bounce off this one and I can buy off that. So that's another one that I would like to possibly take. It trades higher, comes back down, bounces off that, and I go long. Okay. All right. Thank you guys for your time. I really appreciate it. I hope you have a wonderful trading week. And if you haven't used Forex Tester, Forex Tester is a really, really, really good idea because you can get your statistics. After you get your stats, I'll give you a link. That's where you get Forex Tester at a discount if you don't have it. And then use this link and you can plug your stats in and see what your risk of drawdown is and all that. So you go through Forex Tester. You want to do it at a very minimum 100 trades, and then you get some win rate, average winner, average loser. Plug those numbers into the risk calculator here, and then you can figure out how to avoid a drawdown. What you really want to do is work backwards and say, well, if I hit a drawdown of X%, would that freak me out? Okay, if I get a 30% drawdown, I'm going to freak out, and I'm going to do something crazy and quit trading or change my system. So how do I avoid that? Well, you do that. You find out what your stats are in Forex Tester, plug them into the risk calculator, and kind of work backwards, and then you know how much to risk per trade, assuming you're using a constant risk per trade, and that way you can avoid or hopefully avoid. We don't know what's going to happen in the future, but based on past data, you would have avoided that drawdown. That's really the way to work, because drawdowns, and we'll do a webinar on this, but drawdowns are the reason why that's the reason why people screw up their trading. It's drawdowns. That's it. It's as simple as that. They don't understand risk. They get the drawdown wrong. They risk too much, or they don't anticipate what's very likely to occur, and then they get in real big trouble. So thank you so much for your time, guys. I wish you happy trading, and we'll see you in the next webinar. Take care. Bye.